Chairman at Ican Investment Advisors, joins us on the show right now. Anil, hi, morning. Firstly, a word on the RBI measures. And does it seem like the Reserve Bank now seems to be putting growth on the back burner, wanting to arrest the rupee slide, which, by the way, hasn't even recovered all that much?
Good morning. Actually, it's not a very good morning. So, but I think what we are seeing is knee-jerk reactions. I think we have lost the plot, as I've been saying often on your channel, that I think we have lost the plot completely. Now it's just some firefighting here and some firefighting there. And in a way, I think the banks have been caught completely off guard, and I don't have any sympathy for them because they were just not looking at raising deposits, which is a core business of the banking, and they thought that they could rely upon the overnight money market situation. So they are completely caught off guard, and I think they deserve to be.
But Anil, do you think the strength in rupee is rather temporary in nature, because ultimately it all boils down to economic growth, capital formation and dollar inflows?
Absolutely, Nikunj, I think we discussed last time as well. I'm not a rupee bull, so I will be again parroting the same thing. So these are all again short-term measures just to prop it up, but it has to find its own level, and it will find its level despite all these short-term measures being taken on that. And I think we fooled ourselves for a very long time when it was around 45 and 50. That was really not the true value of rupee. So when you look at it and adjust it for the inflation, and I don't fool myself with WPI, as often I've said. I think it's a CPI. So CPI is at 10%. So long you don't really crack on your inflation, and inflation is CPI, not WPI, your rupee will bound to get into this kind of knocks.
But I mean, Anil, what one is sensing is that definitely this is catastrophe for a market which has just about dragged its feet without any fundamental support or economic support just to that 6,000 mark, and again it puts you back to that 5,900 mark, which again we are testing right now. In terms of an equity mood, how much of a sour sentiment is this particular move by the RBI?
I was very surprised when it moved up to 6,000. I never expected this to move up to 6,000. But again, if you look at a couple of stocks which really, whether it was Enfi or Hindustan Lever or ITC, and these couple of stocks which really moved indices up. But otherwise, the broader markets, I think we are still into 55, 5600 range. So I'm not surprised that 120 points today in Nifty are shaved off. In fact, to my mind, it has still a potential of correction by at least 5% more.
But Anil, look at the bright side, and the bright side is that whatever could go wrong has gone wrong. Rupee, flows, macro environment, crude, and we are still in a range. We've not gone below the range.
Nikunj, I would use Hindi colloquial language, picture abhi baki hai. So don't count your horses as of now. I think we are still going to go through. If you're looking at every step which is being taken, that's what I'm saying, that I think we have lost the plot. So now it's going to be more of a firefighting, and in that we are going to make huge mistakes going forward on that. Inflation will continue to hound us because we don't seem to be really taking long-term measures to have the inflation down. Every time we have heard policymakers, look at the next quarter, it will come down. Now it can't, on its own it cannot come down unless we really look at the supply side of economy. I think it's not a seasonal, it's a structural, as I've been often saying.
Well, it's a 566-point cut, by the way, that you're seeing on the Bank Nifty futures, 300 points in excess of that knocked down for the Sensex as well. So suffice to say, Anil, that there is going to be no rate cut anytime soon, if not a rate hike, this policy?
I've been saying for some time, and I want to repeat it again, no rate cut, and I will not be surprised if RBI takes a U-turn, and it will be a sharp U-turn on that, because at the end of the day, inflation is a problem. I don't think RBI can really influence growth. So I think it's foolhardy to think that RBI's actions can really revive growth. Growth has to be done by policymakers. RBI is basically a monetary policy, and largely for Government of India as a borrower. So it is really caught into a dual role, and I really pity RBI for this action, that every time they've been used and they've been abused actually, more often than not, that they are coming and they are the stumbling block for the growth. I don't think so.
Gold import is down, monsoons have been okay, and if rupee stabilizes, that indirectly will also fix your macro.
Well, Nikunj, I think I'm glad. Actually, I agree with you that monsoon has been good, but we are looking at gold import only for the month of June, and we are forgetting that in May we imported almost 160 tons of gold. So going forward, I'm not so clear in my mind that whether gold imports will be at 30-40 tons. I think it will go back to about 60-70 tons, which was our average for last almost about 2 years. Now coming back to your question that whether we are really heading for some better times than what we have seen in past couple of months, I think if we can really fix the situation in a long-term situation, we will still be better off. But I think we seem to be just taking all firefighting measures, which is really not helping the cause. I mean, one day we announce some policy measures just because we are caught off guard on this. I don't think that is the way to handle. We are still struggling to get past even 5% GDP growth, and I'm not too sure whether even June quarter can be more than 4.5 to 4.8%. So we are still struggling. So all these policy announcements or all the policy makers' announcement, actually they have been just making announcements. So there's more of lip service than really action on the ground. So I'm not too sure whether we can really get past inflation, which is really staring at us. We are not looking at the tight liquidity situation, which is also staring at us, and we are not taking advantage even of rupee. Nikunj, I'm very sorry to say this, but we have really killed our manufacturing base in India. We have paid so much of attention to the service sector for last several years that agriculture and manufacturing both have been really just given a good pass by government, which is really not a good sign. Today we are struggling. In fact, manufacturing is struggling so much, and that is both. That has to be our backbone, and that has to be a employment generator. But I think somewhere we don't seem to be really fixing ourselves onto manufacturing and on agriculture, and these are two key factors for my mind. I don't think, I'm not such a bull on this that services alone can take us back to 7-8% growth.
I've never heard you that bearish, but what really could trump all the bearish argument is valuations. Let's not look at consumer names, pharma names, FMCG names. There are stocks in the manufacturing sector, there are stocks in the capital goods space which are now available at single-digit P multiples. So are markets pricing in all the bad news?
Well, Nikunj, when your top line is going to be woefully short of even 2-digit, I think it's going to be single-digit growth, which is going to come in. If GDP is growing at 4.5%, I'm not too sure whether many companies will be able to clock into double-digit growth. So when your top line is not going to grow, and when your cost pressures are going to be there, I don't think the corporate profitability is going to be that good, and which I've been saying for last almost about couple of quarters on that. So I think the valuations are reflective of that, and secondly, the whole confidence seemed to have gone. So I don't think I look at valuation in isolation. I think it's more of confidence, and today I don't think there is any confidence left in either our economy or in the growth of capital markets.